please welcome Haseeb, managing partner at Dragonfly.
Hello. By the way, you
Hello.
forgot to mention I am also founder of Helios, and I'm a well-known Solana KOL. So happy to answer any questions you might have about that. Bald man.
I was hoping Mert would at least come for like some 10 minutes, just show face, and you would be on and wake him up.
I'm here. Well, yeah, you don't need any Mert. I'm here.
I need Mert.
By the way, you need to make your bed.
It would be nice to have him, but yeah, thanks for coming earlier as well. Like, I don't know if we disrupted your agenda.
No problem. It's July 4th weekend here in the US, so there's not a whole lot going on today, so it's all good.
No, you're not checking the fireworks.
There's no fireworks yet. Fireworks should start tomorrow because right now it's July 3rd in the US.
So I have some questions for you. You know, like how I usually just improvise the whole thing. I've been improvising 70%, but I have some questions that are interesting. So check my notes now and then. I never asked you poker-related questions, but I know in trading, they often hire people who can play poker. Have your poker skills been useful in venture?
In venture. So poker and venture don't have a very large overlap. Poker is very similar to trading because it's very fast feedback loops and very tight iterations. You play a hand of poker, you immediately know, did I win, did I lose, did I do the right thing? In venture, you have very, very slow feedback loops. So you back a founder and it takes years to know whether or not you made the right decision. And you start to see a little bit within the first year or so of, okay, this company's growing, they seem to be getting some traction, but then, the company can always blow up after Series A or after Series B. Even they can seem like they're making progress for a couple of years, but the founder had some fatal flaw that caused them to fumble the ball in, the last play of the season. So the reality is that it's very hard to learn quickly, did you do a good job as a VC? And there's a lot of funds that have raised money on early marks in a portfolio that turned out they didn't have any winners. If you invested early into Axie Infinity or into OpenSea, it might have looked like, wow, I'm an amazing investor. I've done such a great job. There's a couple funds that were very early investors into FTX that they were just, like, oh my God, this guy's champion of the universe. Can you believe he did the FTX seed round? And just a couple of years later, it ends up being like, okay, this fund is kind of a nobody now because their star portfolio blew up. So venture is unique in that way. And so what that means is it really requires you to give yourself that feedback as opposed to expect the world to give you that feedback. Because as a VC, you got to learn, you got to keep getting better, even though you don't know the outcome of an investment for many, many years. And so that really has to come from your own judgment of how you're doing. And that judgment being the form of feedback, as opposed to the world being the source of feedback, is very difficult for a lot of people. The other way in which it's different from poker is that venture is a team sport. Poker is a single player game, right? You obviously play with other people, but it's you against the world. It's like PvE. Venture is not like that. Venture, you only win if your founder wins, if the rest of your firm wins, if the other partners who are doing deals at your firm win. And for that reason, it's extremely collaborative and relationship based. Whereas if you're a poker player, you kind of don't need to care about anyone else in the world. As long as you can sit down at a poker table and play and do well, you can be an asshole, you can have zero friends, and you can still be a successful poker player. So that's another way in which it's quite different. And most VCs who are very good at what they do are very good relationship people. I don't think I'm that great of a relationship person, but I'm much better than I used to be. And I'm a lot better than most of the people I know who are traders. Most traders, it's like poker. They don't have to be nice. They don't have to be good relationship people. They don't have to have a lot of connections. So I think for that reason, the skills that lead you to being good at venture that do come from poker are the ability to think clearly about risk, the ability to control your emotions very well. Those things I find a lot of VCs actually are not very good at. They can get very emotional. They have a tough time with conflict. Those are two things that I'm very good at. But for the most part, I don't think those matter nearly as much as the other core skills of VC, to be honest.
Oh, right. Yeah. Well, when you put it like that, we recently, well, I don't think we talked about it on an interview, but we've talked before about how venture is in some way full of distractions, and as you put it, at the end of the day, it's about hitting the ball. How? Well, two questions here. One, tell me who you think is really good at hitting the ball other than yourself. And what does it take to quiet the noise and focus on hitting the ball?
Hitting the ball. Who is very good at hitting the ball? I'd say, probably the most controversial investor in our industry, which is Kyle Samani. Obviously, he has now exited his ball hitting days, so he's like the Babe Ruth. He's retired, but he probably has the most pound for pound IRR and P&L on a dollar invested basis than anybody else in the industry. So if there is a GOAT in VC, it would have to be Kyle Samani. Now, that said, he is a very, very, what would I say, non-consensus person. He obviously attracts a lot of drama wherever he goes. But he's a true contrarian. And the best VCs have this contrarian streak that they don't just index what other people are doing. So I'd say Kyle Samani in terms of who's good at hitting the ball. What it takes to hit the ball, I mean, this is the hardest thing about VC, is that it's very easy to convince yourself that you're wrong. It's like, okay, well, Chris Dixon's doing this deal, or Paradigm's doing this deal, or oh, this company's so hot, they're blowing up on Twitter, everyone's talking about them, especially in crypto, where so many of these deals are done pre-product market fit. Where there's this new L1 that's launching. There's this Bitcoin L2s are hot. Babylon is hot. Eigenlayer is hot. These concepts that they haven't necessarily proven themselves at that stage, but the idea has so much traction and is kind of flying around everywhere in people's minds and in their collective conversations. It's really hard to convince yourself that no, I'm right. I don't believe it. Or I do believe it, and this thing that no one's talking about, that no one cares about, they will care about it. That is it's very difficult to do that. And so what it takes in terms of quieting down your mind to hit the ball, I think the answer is it's built through the discipline of your investment committee. It's part of the reason why VCs often operate in firms. They don't operate alone. When you're alone, it's very easy to get peer pressured. It's just, there's so many voices and so many external forces that are acting on you as a thinker. But when you're within the context of a firm and you've built this institutional culture of look, we don't take anything on faith. And even if you're getting swayed a little bit, your partner's not getting swayed. Your partner's like, well, no, prove it to me. If this thing is so great, if the Bitcoin L2s are so great, then show me the data. Show me the evidence. What is the argument? Let's really map it out and walk through it step by step. And if you can't do that for me, I don't believe it. That discipline is a discipline that we at Dragonfly, we've built over the years in the culture that we have as a firm. But if you don't have that, that's what I think makes it really hard to be a great investor.
What is the most dangerous blind spot that crypto VCs currently share?
The most dangerous blind spot. I think if you're a crypto VC, you are a creature of crypto cycles. There's everyone who's done this for long enough has experienced the ups and downs, has experienced the sense that, none of this stuff matters. It's all bullshit. It wasn't that long ago that financial nihilism was the cultural zeitgeist within crypto Twitter. And people believed that none of this stuff mattered. None of it was valuable. It was all memes. Now people, there's I wouldn't say it's financial nihilism today. It's more that it's not that nothing matters. It's that only a few things matter, and they only matter if they have revenue, and these things that don't have revenue don't matter. I think if you're a crypto VC, it's easy to fall into this view that, there's this kind of Hegelian dialectic that things just come and they go and they come and they go. And there's an infinite time series of booms and busts waiting for us. The longer you're in crypto, you just get more 4-year cycles, and it's 4-year cycles all the way down. And if you allow yourself to be lulled to sleep by this idea that it's inevitable that this is how it's going to play out, I think you can potentially make very, very bad mistakes as an investor by just not really thinking deeply enough about what's going to change. The other thing I think people don't think enough about is that at some point, crypto VC might just be over. There might just be a last vintage. And if you think about, for example, social media was the biggest technology trend of the 2010s. Almost all the public market, you think about, Google and Facebook and, Microsoft with their acquisition of LinkedIn, the biggest social media networks just kept growing and growing and growing and growing. But VC in social media was basically done by like 2009. There were almost no new social media companies that were created after 2009, except for TikTok. ByteDance was pretty much the only one that actually was able to build a real meaningful business after that time. And although the products themselves evolved, the platforms didn't evolve at all. It's basically still, Meta, WhatsApp, Instagram, blah, blah, blah. All that stuff existed in 2009. So it may be that crypto actually looks like that. That even though crypto continues growing, stablecoins continue growing, Bitcoin continues growing, Ethereum continues growing, all these things go up and to the right. But, let's say maybe by the year 2030, pretty much every important company is built. And the platforms are just so big that they keep growing, but there's really very little room for new players to be able to come in and disrupt. Now, I don't know that will happen. And if that does happen, I don't know when it will happen, but it will almost certainly happen at some point. It happens that way in almost every industry, especially when there are returns to scale and there are network effects, as there are in crypto. But I think most crypto VCs don't think about that. And I think that's a potential blind spot, is to believe that, well, because we've been doing this, we'll just continue doing this forever. There will always be consumer companies. There will always be new consumer companies. It's not clear there will always be new crypto companies. There may be, but there might not.
I felt that actually. It's interesting you're saying that, because when I went to this fintech conference in Amsterdam, Money 2020, it felt to me that this is the moment for these crypto companies to claim their spot and eat up, like partnerships and eat position basically in the fintech world, and really set ground for a chance to even grow and stay around. So that's very interesting. Dragonfly has been good at skipping categories that later failed, also known as trends. Are there any categories still around that you believe won't last?
Yeah, I mean, good question. There's a lot of categories that are basically dead, or they're on death's door. We do occasionally get pitches for some of these. There's still occasionally, I'm doing Bitcoin layer 2 with lending or something. We do occasionally get stuff like this, but it's pretty rare now. I would say one of the categories I see a lot are these structured products on Hyperliquid, where it's like, this is a CLO on top of Hyperliquid, and CLOs are a huge market, and so Hyperliquid will have them, and it'll be a huge. So we still see a lot of these kind of esoteric financial products that are trying to launch on Hyperliquid or on some kind of isolated venue. I think this will probably stop sometime soon, just because these are not businesses. Like having just one financial product is not, like, there's no business ever been built on selling one financial product. So especially not if you don't own the distribution, right? If Hyperliquid owns the distribution, then you're essentially just like a reseller, or Hyperliquid's a reseller of like your product. That's not a very compelling business model. What else might go away? There's a lot of people who are tokenizing individual assets. So it's like, I'm tokenizing gold mines, or I'm tokenizing, this cars. It's just like, this is not a business, like this is maybe a product, like this, it's good that this exists, I guess. But if you're not tokenizing something really big, like treasuries or stocks, and bringing them to scale and actually figuring out the distribution, these people who are trying to say, I'm going to tokenize this one asset that I own and please venture back it. I think this stuff is gonna go away if not already. Those are the things that jump out to me the most. There's a classic one. So there's this joke in traditional venture capital that there are these kind of these basins that founders keep falling into all the time, especially when they pivot. They just tend to like the same ideas and constantly do them over and over and over again, even though VCs will always tell you, don't do that, right? So one of them is dating apps. Like anytime a founder pivots, they always consider doing a dating app. And it's almost always because like founders are young and single, and so they think a lot about dating. Or another one is co-founder dating is also a very common thing that founders end up thinking because they're trying to find a co-founder. And dev tools, right? A lot of productivity tools. A lot of like, oh, I'll make a better to-do list. I'm going to make a better, Asana or whatever. So there's a lot of these basins of bad ideas that people just keep coming to again and again and again. Crypto has these as well. I'd say the most common one is Bloomberg for crypto. So it's funny because like Bloomberg for crypto was like a bad idea when I first became a VC. Like 10 years ago, people were pitching me on Bloomberg for crypto. And every year, you always get pitches for Bloomberg for crypto. And they don't really know what they mean. It's a little bit vague what Bloomberg terminal with crypto would even mean, or like what's supposed to be in there, or blah, blah, blah. But it's kind of like, look, it's 2026. You need a crisper angle of attack than just like a tagline like Bloomberg for crypto. So those are things, I don't know if that's a trend so much as just like a little tidbit of, there's a lot of these things and they stay in the air. They never quite go away.
How can less experienced investors maintain an objective, clear perspective when constantly surrounded by market hype and 24/7 noise?
I think talk to less people is honestly my advice.
Really?
I think if you're a new VC, I think a lot of new VCs make the mistake of talking to too many people and having their opinion be the average of what a bunch of people who they know are. I think as a VC, it actually really helps you to really kind of force yourself to think for yourself. And it's very easy to be like, oh yeah, I'm thinking for myself. I have my own ideas. I wrote a blog post. I whatever. I write my notes after I talk to someone. But the easiest way to not think for yourself is to just talk to too many people who have strong opinions. Now, it's not to say you should talk to no one, but most VCs I know, they just are basically a pastiche of like the 7 people they talk to most often. And the more that you are actually by yourself and just thinking and like reading and learning, the more you're actually going to have your own unique opinions. Now, they might not be right. They might not be totally accurate, but at least they're different from other people around you. And the most likely way you're going to have alpha is by actually thinking differently. So there's a risk that maybe you're wrong, but there's a risk also that maybe you're right about something else that everyone else is getting wrong. And as a VC, that's what you get paid for. You don't really get punished for being wrong. If you have a portfolio of 50 deals and 15 of them are wrong, who cares? All that really matters is that you get the one thing right that everyone else got wrong. And that comes from being able to think differently.
I think that takes some degree of self-awareness, because even through the podcast, I've had guests. I've interviewed a lot of people, so it's not from today. Saying this mostly for people listening. That they will obviously talk with a lot of people and try to piece things together and feel that that's an original idea. But in reality, it just feels like they're sort of regurgitating Twitter timeline or things are being said around instead of having something truly unique from stuff that they've read online or something that they've put together from their own minds. So I think perhaps it takes a level of introspection to reach that.
I think it also takes a level of self-confidence. It's very easy and safe to talk to a bunch of people and be like, oh, okay, here's what I think about, neobanks, because I talked to 5 people and they think this about neobanks. And so I'm going to average their opinions and then say that on my next podcast. I think it's a lot, it demands more of you to not do that and to really try to re-underwrite and think for yourself about what you believe about these things. And again, like the cost of being wrong is not that high. So I think most people are trying to optimize for seeming smart or seeming good at the job, as opposed to actually being good at the job. And that's, again, one of the reasons why I always say Kyle Samani is the GOAT. He is crazy, right? He clearly is just in his own world. He has very, very weird beliefs about a lot of things. He's gotten a lot of trends wrong and very confidently stated, oh, I think XYZ is going to happen, and he's totally off. But it's kind of like, it doesn't matter. If you get the one thing right that pays for everything, who gives a shit? VC is not the business of like trying to seem unobjectionable or trying to seem like, an audience, a focus group would think that you're smart and respectable. That's not how you win as a VC. You win as a VC by getting the one thing right that everyone else gets wrong.
What has fundraising millions taught you that you wouldn't have learned otherwise?
Well, first, I've fundraised at this point over $1 billion. So
Billions.
Fundraising in the millions, I think, there's a different set of lessons you have to learn than fundraising in the billions.
Okay.
But the question in the millions. Okay, you're going to modify the question. Okay.
No, I'm changing the question.
Yeah. Here's what I'd say. When you're fundraising, one thing you realize through fundraising is that there's very different styles of fundraising, and they can all be successful. One style of fundraising is really like building trust and getting to know somebody on a personal level and making them invested in you and want to back you because of who you are and what you believe. I am not good at that. I am no, not at all. I'm a pretty antisocial person. It might not seem that way, but it's very much the case that I have a tough time being able to build deep relationships with a lot of the folks who are investors and allocators. I think the place where I end up being successful, and there's many strategies to succeed in fundraising. There's not just one. My MO, and this is also where I tend to succeed more in fundraising, is more with institutions. And institutions, what they really care about more than anything else is you demonstrating extreme levels of competence and knowledge and mastery over your domain. If you're a family office, you're an individual, very often that's where relationships and trust is going to matter a lot more. And they kind of want to know you for a very long time and get to know who you are and how you operate. And they want to be able to pick up the phone and call you, and maybe even get a beer with you every once in a while. Whereas institutions, what they're looking for really is that you are the best in the business. You are the best at this of anybody that we speak to or know of. And you can make the most ironclad, robust argument of why you're going to win and other people are going to lose. And you bring the receipts for it. That is where I tend to be strongest in that kind of fundraising. But the reality is that if you're raising for a fund, if you're raising for a lot of money, it's a team effort. You need people who are good at these different styles of fundraising to be able to attack different parts of the fundraising market. So, if you're a fund, if you're a founder and you're raising, you're basically raising from VCs, right? Maybe some corporates, maybe some individuals, but mostly you're raising from VCs. And VCs are all pretty similar to each other. But if you're a fund and you're raising from pools of capital, those pools of capital are very different. They're not as similar to each other as VCs are to each other. So raising from an endowment versus raising from a hospital foundation versus raising from an insurance company versus raising from a public pension versus raising from a family office. These are all very different experiences, and they require different skill sets, different angles of attack, different storytelling in order to get this stuff to work with each of these different groups. So fundraising is its own skill. The people who are really great at VC are good at both investing and fundraising. I've gotten better over the years, but I'm definitely not a world-class fundraiser.
Well, it's very impressive. I think for a lot of people, you are. We're gonna turn the conversation from being an investor to now being a founder, because this is something that I always hear you providing a lot of value. What is the biggest tell that a founder is highly likely to succeed at scale?
At scale. That's an interesting addition to that question. At scale, what makes someone likely to succeed at scale? I think being very intellectually flexible is probably the best predictor that I've seen of somebody who's good at handling scale.
Can you
the
expand
reality is
on
being a founder, so people think of being a founder as like, okay, there's founding skills or CEO skills or whatever. But the reality is that if you're a founder of a successful company, your job changes every 2 to 3 years. Being the founder of like a 3-person company versus being the founder of a 15-person company versus being a founder of a 100-person company versus being a founder of a 1,000-person company. Each of these really requires a different skill. It's a little bit like, being, it's like going from being the head of your PTA to being the mayor of a small town to being the president of America. Like, those are actually really 3 different jobs, and they require different skill sets. Being the president of America does not mean you're going to be a good PTA member, and also doesn't mean you're going to be a good small town mayor. So the founders who are very good at adapting are ones who are very curious about learning, changing their minds, letting go of old frameworks and adopting new ones. The founders who don't tend to do well with this are founders who are like, oh, I used to do this when we were 7 people. Why are people not following my instructions? Why is the product velocity slowing down? Why is there so much politics now? And they sort of think that this is a problem that needs to get solved. Oh, the problem is there's so much waste, or we have, leeches in the executive team. I got to fire them all. We got to go back to basics. No, it's not to say those things are never problems. They often are. As a company scales, almost inevitably, they're going to be growing pains. But the best founders are ones who are curious about the way in which the job is supposed to change as you get to scale. And they adapt their skill sets to be more, again, like running a 1,000-person company is more like running a small town, where it requires political skills. It requires diplomatic skills in order to run a company of that size, as opposed to running a 7-person company is really just all execution. When you're in a 7-person company, you don't need a lot of management. Everyone's rowing in the same rowboat, and you don't need to talk. You just see what everyone else is doing and you row. But when you have 50 people, 100 people, 1,000 people, then everything is about communication. There's nothing that you're going to do personally in a 1,000-person company that's going to move the needle. Everything that you do is about moving the troops through the commands you're giving as a general, and orienting those troops and inspiring those troops to be willing to go the extra mile and really put the attention to detail they need in order to create a great product. So that's why I say that's the hardest thing for most founders who get to scale, is navigating those changes in their job. And not everybody can do it well.
Yeah. What would be a tell? I guess you mentioned something, but I'm imagining, like, if an idea has potential to scale massively, and then it comes down, can this person do it? What would you seek in their skills, personality, whatever, to?
Yeah. In order to underwrite a successful founder, generally our philosophy is that we look for spikiness. So we're investing for strengths, not for lack of weakness. Almost every great founder has weaknesses. If you think of Mark Zuckerberg, at the time that he was building Facebook, obviously not a great leader, had very significant weaknesses in his ability to lead a team. But at the stuff he was strong at, he was world-class. Almost every founder, Travis Kalanick, founder of Uber, also very famously, he had tremendous strengths, but also very significant weaknesses. I think this is a kind of a universal law of startups, is that the best founders are not the all-rounders. All-rounders make for great executives when a company is at scale. Somebody who, they're never going to quite drop the ball. They're never going to quite say the wrong thing. They're never going to make anyone mad at them. These people are good when a company is at scale. They're great executives, but they're not good for 0 to 1. And they're not good for navigating these phase transitions that a startup generally goes through as it grows and scales. So we're okay with deeply flawed founders. I think you have to be in order to fund great companies. What we're not okay with is a founder who's not great at anything in particular.
If I flip the question and I think like a tell that a founder wouldn't succeed, so let me paint a scenario. The idea is great, it's scalable, the team is great, everything looks good on paper, and they even managed to get a lot of good funds in, but there's something off. What is that usually?
There's something off. I mean,
say more than one thing.
Yeah. So, one of the most obvious things is integrity. So if this founder is not being completely honest or completely transparent, look, every company, there's always a little bit of puffery. There's always a little bit of, we're going to take over the world. We're going to have a cajillion, we're going to do this, we're going to do that. We have we're going to have a partnership with this person tomorrow. And you ask them, okay, but is it, how far along are you? Yeah, there's confidence, but then there's also confidence that veers into dishonesty. And that is a very, very, very strong tell, because that kind of behavior only ever accelerates. I've never seen it get better. It only ever gets worse as a company grows. So that's one that is kind of like a showstopper. If we see a pattern of dishonesty, that'll get us to say, you know what, we're good. The other thing I'd say is just consistency. Is, very common mistake that a lot of investors make is they really like the story, they really like the founder, they really like the team, they really like the market, but things just aren't quite adding up. The founder is saying that, oh, they're super eager to get this thing closed, but then they're kind of slow rolling and they're not moving very fast. Or, the founder is, they're very, very bullish and they have a lot of demand, but they're willing to relent on all the terms and they're actually giving a pretty low valuation. Okay, so these things are not consistent, right? Like the story is not quite adding up. And very bad investors oftentimes will just ignore these. They'll be like, oh, well, it's probably that I'm so great. Or it's probably that, there's just, they find some innocuous explanation for why the story is not consistent. Almost any time the story is not consistent with the behavior that you're seeing from a startup, you're missing something. And if you don't know what it is, probably it's not good for you. That's almost always the answer. If you don't know what it is, probably it's not good for you. And if you learned it, you would not want to invest. So that I'd say it's not a specific thing, but it's like a category of things that as investors, you just learn the more experienced you are that, hey, spidey senses are tingling, pull the brakes. Something isn't adding up and we don't know what it is. And if you don't know what it is, probably it's not something you're going to like.
How often do you catch founders lying? Is that like a common thing?
So most deals, you never even get that far along, so that if the founder's lying, who cares? Because we're not even going to pass, or we're not even going to investigate it because we're just going to pass.
Yeah.
The founder lying when you get into the actual meat of things, pretty rare, but not so rare that you don't see it. So it's more often, again, puffery is more common, right? Puffery of just sort of, oh yeah, we're going to have a deal with NVIDIA, or, oh, we're going to, Binance is really wanting to come in. And then you go talk to Binance, you go talk to NVIDIA and they're like, oh, we're thinking about it. This kind of thing is very common. So I wouldn't consider that a lie. I would consider that, okay, they're obviously trying to get us to buy. They're obviously excited. They like their company. Maybe they're not even calibrated. Maybe they think that they're going to come in and they just don't know because look, it's an early stage startup and these guys maybe are young and inexperienced. So I don't generally take that as being that dispositive of I can't trust this person or they're lying to me. But somebody like actually lying about something material, I'd say very rare, but it does happen. And when it does happen, it's like an absolute showstopper.
Yeah. The idea of solo founder used to be frowned upon, but now in the AI era seems to be celebrated. Did you ever have any frameworks around it? Why do you think it existed? And do you think it's actually true that now someone can run the show on their own?
They can, and it's always been possible to start up by yourself. It's more that it's not that it's that hard to start a startup by yourself. It's more that most people who try to start a startup by themselves, there's some adverse selection in that, like, if you're really good, people will want to work with you and build a company with you, and you'll find really strong co-founders. If nobody wants to build a business with you, it could be that you don't understand that you're not good enough to work with the people you want to work with. Or you think you're better than everyone and you're not. Or
maybe
you
the
just don't
is
get along with people.
It's like, yeah.
So maybe you just don't get along with people, which is not a great signal for building a company and being able to win allies and customers and hiring people well and retaining them and so on. That said, if we don't think there's anything wrong with the person and they're just starting a startup by themselves, yeah, we don't care. It's totally fine. So it's not so much that like, oh, there's a bad sign, so much as it's more likely that this will be a bad founder if they're a solo founder. The other thing, of course, is that there are oftentimes fatal flaws with a founder, right? So let's say a founder is extremely technical, they don't really have any business sense or business experience or sales experience or whatever, but they've partnered with somebody who has that. Then it's like, okay, this team balances itself out and they're making up for each other's weaknesses, which makes you less worried about the downside of this founder CEO. If you're a solo founder, then it's like, okay, now I'm really worried because like, who's going to stop you? If you hire a chief business officer or a COO, right? The reality is that within a company, founders are special. They're always special. Doesn't matter if like, oh, this founder has a weakness and they know they have this weakness and they hired the COO and the COO is, doesn't matter. It's always true that the founder is special. And the COO or the chief business officer or the head of sales or whatever is always going to be slightly holding themselves back because they don't have control. And if they don't have control, that always means there's a power distortion field that's being applied by the founder, whether they know it or not. And having somebody else who's also in the distortion field, they're sort of sitting inside the bubble with the founder, is a very powerful corrective in being able to avoid some of those failure modes or those weaknesses. So that's why, as VCs, we care about this. But if the founder doesn't have that, then yeah, whatever. It's totally fine to be a solo founder.
Okay. Yeah, I definitely agree on the bubble part. So the industry in the past 6 months obviously has been shaken, and a lot of the founders had to pivot, like look inside of the company and restructure things. Some people have been laid off. Do you have any advice for founders that are still around? And when I say founders, not, like pre-raising, but like people that have been around for a while and maybe are feeling a little bit lost, like if they should just quit and exit what they've been building for maybe a few years, or if there's a better mindset around it.
Man, I'm very loath to give advice without having somebody and their situation in front of me. It's a little bit like giving advice to young people and saying, "Oh, you're in college. Well, here you should do this. You should go take this degree and you should do blah blah blah." And it's like, if you don't know this person, you don't know their environment or their circumstances or their skills. I think it's actually it's not just hard. It's probably bad to be giving advice in generality without really knowing what someone's situation is. The number one thing that I would say that may be useful is oftentimes what holds people back from being able to make decisions that they know are good is shame. And there's a lot of shame that gets wrapped up in the time, the energy, the money that you've raised, the employees that you have hanging on you, that prevents people from making what ultimately is the right decision. And the right decision might be to wind down. It might be to get acquired. It might be to do something else. It might be to keep going. But the most deleterious thing for a lot of these founders is that they feel ashamed of making a decision or straying from the status quo. And the only advice I'd give is try your best to let go of that and to really try to assume that, okay, imagine that it wasn't you, it was someone else that was in the situation that you're in. What advice would you give them?
I imagine a lot of it could be having the confidence that they are having the right judgment. So I guess the question could also be formulated in what's the right framework to look at the current state of the industry, and from that perhaps people can take information and make their own decision.
Yeah, I think it's very clear there are parts of this industry that are never coming back. If you're sitting around holding NFTs, hoping that someday there's going to be another NFT cycle, I'm like, you should probably let go of that. You should probably move on. You should probably find something else to do that's going to be a good use of your time and your capital and your talents. On the other hand, there are parts of the industry that I do think will come back and that are deeply cyclical. If you look at DeFi is a perfect example of this. A lot of DeFi things are down bad, but DeFi is one of these things that I think is just never going to go away. And it's going to be a fundamental part of how the world works and about how crypto works. So that's why I say it's hard to speak in generalities. There's the famous line from Anna Karenina by Tolstoy, which is that all happy families are alike, but all unhappy families are unhappy in their own way. And I think it's very true of startups as well.
Wow. Okay. So we've covered.
Deep, right?
That was very deep. It distracted me from the question I had next.
Okay. Good. It's working. That's why I'm such a great VC.
So beyond that, like when you think of all the categories, we've talked about the categories that won't be around. We're talking now, like a lot of this is not going to be around. What is certain to be around? Others, like, don't tell me DeFi, like be more specific. Yeah.
What is certain to be around? I think prediction markets will be around. Layer ones will be around. DeFi will be around. I think it's very clear that the connective tissue between on-chain and off-chain, on-ramps and these kind of capital corridors, they'll be around. Remittances will be around. Payments will be around. What else is there? Stablecoins obviously will be around. The issuers, the orchestrators, and so on. Those are pretty much guaranteed in my mind to continue to matter. Pretty much everything else, it's hard to say.
Okay, that's good. You predicted that a major tech giant will integrate or launch a crypto wallet this year. I don't know if you recall that. Which Web2 company is closest to actually doing it, and who is completely missing the boat?
So to be clear, I am already right. I made that prediction in January, and I think it was in March that it was leaked that Meta is going to be launching their own stablecoin wallet. So nailed that. They've already announced that they're doing stablecoin payouts in emerging markets for creators I believe on Instagram. But they're going to be expanding it. They're going to be launching a wallet at some point soon. And obviously, Zuck has been very bullish on crypto ever since Libra. He believes in the space very clearly. So I think Meta is probably going to be first to the race. But if you look at this OUSD announcement that took place just a couple of days ago, this stablecoin consortium, there's going to be all these different companies that are stablecoin issuers. Google is on that list. Google is one of the members of the OUSD consortium. So could well be that GUSD or Google's USD, which is a wrapper over OUSD, may go live. OUSD is supposed to go live later this year. That said, I have some skepticism about OUSD, and I've been tweeting about how I think I said on the chopping block this week that I thought OUSD was probably not very likely to succeed because of this consortium of 140 companies. It's kind of like this, sort of UN type model with way too many cooks in the kitchen, and this kind of diffusion of responsibility doesn't tend to end well. And we already saw just this morning, I was tweeting about this announcement that some of the Korean companies, I think it was, what was it, Hyundai and SK Telecom or something, they announced that they were like, yeah, I don't know why we were in this announcement. We don't know about this. We haven't signed anything. I don't know why they included us. And there may be more of this coming of just like, oh, I thought I signed like an LOI. I didn't approve you saying to the world that I'm launching a stablecoin. Which, by the way, also happened with Libra, 5 years ago. So what's old is new.
I never, so the fact that it is Meta, like I feel like Meta says we're going to do this, it stays around for a little bit, sort of like launching products that don't seem to work. So Meta launching a wallet, I'm like, for 3 months, like how long is that going to be?
What?
I don't know.
Hold on, that definitely, how does that not count? That's a top 10 company in the world.
It is, and if they launch, you're right. But in terms of it lasting, it's a different story, which is not what you said. It's not what you predicted, but this is just me adding to it. Like I would feel like, something has
Sounds
happened.
Like you're nitpicking. Yeah.
Am I? Well, we'll see how long this wallet lasts.
We'll see. I mean, look, when it comes to like coverage of emerging markets, there is no rival to Meta. Like if you look in places like India, Southeast Asia, LATAM, these people live on WhatsApp, and obviously Instagram as well is ubiquitous around the world. So these are enormous platforms with respect to their reach. So I wouldn't take it lightly that they're launching a stablecoin wallet. Like the only person that has more reach than Meta when it comes to people's wallets is probably Binance themselves.
Yeah. What's a core philosophical belief about crypto that you've lost over the years?
That I've lost over the years.
It's been many.
That's a great question. Yeah. I mean, yeah, probably the biggest one is that the best technology wins. I think I had a conviction in that early on that I have since lost, and I no longer believe that.
What has it been replaced by?
It's been replaced by a combination of go to market, distribution, partnerships, product quality, UX, all the obvious things. I mean, I don't think this is going to surprise anybody that best
Yeah.
technology doesn't win. But I think I had a somewhat Pollyanna-ish belief that crypto was incepted by technologists, and the technologists, the tastemakers, the people who are like very deep in the core, in the code, in the algorithms, that they were ultimately kind of gatekeeping for the rest of us what is good enough to use, what is robust enough and trustworthy enough to use. And we've come to a world where a lot of these things don't really matter so much anymore. People don't really care. And maybe that's normal, maybe that's inevitable. But it is a little bit sad to see that, we may end up converging on technologies that are not really the best that we have to offer.
Is there any other beliefs that you had that you no longer hold in the industry?
Beliefs that I had that I no longer hold. I once believed that crypto was fundamentally opposed to the state, and that this stuff would eventually get so big that it would get banned pretty much everywhere. And that crypto was going to have to become valuable despite being this kind of underground, anti-authoritarian asset. And we're in a world now where like that's just not true at all. Bitcoin is in ETFs in the US and Japan and Hong Kong, in Europe. Stablecoins now are legal. You can send $100 million instantaneously to, someone in North Korea, and no one will stop you, and it's totally legal. I mean, it's obviously illegal in that, okay, it's a sanctions violation, but in terms of having to stop the stablecoin before it gets there, that's just how stablecoins work. It's completely the law. So this version of the world is very surprising. I would not have predicted this 10 years ago. And that, I think, has been a fundamental shift in my perspective about what crypto is and what role it plays in the financial universe.
We sort of begins to like normalize crypto and like blend it with how the world works.
Exactly.
I definitely had some.
It's become, it used to be that crypto was a rebellion. And now, it's a little bit like America, right? Like America was founded on a rebellion. It was literally a bunch of people said taxes are too high. They grabbed guns and they killed their government and pushed them out and started over. And now America is an institutionalist. Now America is like, the longest running freestanding constitutional government in the world. You sort of live long enough to see yourself become your dad. That's kind of the moral of the story. And so I think like Bitcoin was born out of this, this rebellion against the banks. And now here we are negotiating with the banks. Like literally that's what's happening right now with the Clarity Act. So things change.
What is the biggest mistake we ever did as an industry?
Biggest mistake that we ever did was making an idol of Sam Bankman-Fried. I think that was the biggest mistake.
Out of everything that happened in the industry?
Yeah, that's what I would say.
Do you think we'll ever have another event alike?
Alike, probably not. It's kind of like the great financial crisis, right? It was a housing crisis. The next crisis is never quite the same because you build all of these defenses and all of these rules to be able to see the next one early. Now we have proof of reserves. Now we have all these sleuths looking on chain and marking what's coming in and out of this exchange or that exchange, checking for solvency tests, all this stuff, all the regulations that are now, Binance getting kicked out of EU, blah, 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 blah. All this stuff is designed to stop the next FTX, which means that probably we're not going to get another FTX. We'll get something. This is definitely not the last failure. This is definitely not the last public embarrassment. But it is probably the last one that will look like that.
Hopefully. Hopefully it's the last one.
Hopefully.
We never know. We could never predict that happening, I guess.
That's right.
So the industry has had these big turning moments, that I guess being one of them, not always for the worse. We've had moments that things turned massively for better. do you think we're going to continue to have that? Like, because as the industry is maturing, seems less likely. We had, for example, one of those moments, I guess, like Trump launching a token was a massive event. And
Yep.
I feel like every year something happens. But I don't know if as the industry is maturing, perhaps we're going to lose that. Or do you think we're going to continue to have those big moments?
I think we will definitely continue to have big moments. I mean, just look at OUSD, right? OUSD was just announced 2 days ago. This is the biggest consortium of like some of the largest companies in the world of, BNY Mellon and, the big banks and Google and, Samsung and blah, 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 all coming together and saying, we are going to build a stablecoin to take down Circle and Tether. That's crazy. If there is a path to stablecoins getting to 3 trillion by the end of the decade, it's going to look something like this. Now, I don't know if it's going to succeed. Obviously, I have my doubts, but this just goes to show, like, yeah, history's not over. We're still in the early innings of this industry. So despite everything that I've said about the things that are not coming back and the things that you sort of can't be complacent in assuming that, oh, okay, it's all going to just rewind and we're going to play it back forward again. It's very clear crypto is still early. We're not done. On the scale of financial assets, stablecoins are $315 billion. If you're BlackRock or it's a financial institution, that's not a lot. Stablecoins are still pretty small in the realm of looking at actual dollar flows, treasury issuances, et cetera. It's growing fast. It's positioning itself to become systemically important, but it's not systemically important right now. It's basis points of the total dollar supply. But that will change. And when that changes, you are going to see a lot more crazy shit happen in this industry. It's going to look different. It's not going to be quite the same form factor as we've seen in the past. But no, the story is definitely not over. And I expect a lot more to be happening over the next decade.
You mentioned earlier that you compared crypto industry with, I guess, social media, like social media VCs and crypto VCs. As crypto begins to blend with fintech and finance and becomes less of a category, all the crypto VCs will have to, like they will no longer work as a category VC fund. So what do you think is going to happen? Do you think the majority is not going to be around? Like, what are you thinking also for Dragonfly? And what's the best way to look at it as well? Like imagining from a point of like someone else running their fund, perhaps not as big as yours. What's the best framework to take?
It's a good question. What's clear is that when crypto succeeds and it crosses that chasm, it succeeds because crypto just becomes ubiquitous. It gets in the water supply. In the same way, like, okay, social was a category in the days of Facebook and LinkedIn and Snap, but eventually social is just a feature. You build an app and you have social features in it. It's not you're building a social network. It becomes part of everything. And in the same way, crypto will not be the company. It will be a feature within the company. Is that, oh yeah, we have stablecoin balances, or we have this thing, or we have, blah, blah, blah. And so I think that is where we are going. And if that's where we're going, you do not need to have a unique expertise in crypto in the same way you don't need to have a unique expertise in social to underwrite a company that has social features. If it's not primarily a social media company. So I think that's where we're going. If not, that's already where we've started to transition. And in that world, the answer is that to be a good VC, you have to be a good VC. You have to be good at all the things that VCs are good at, which means that now generalists are coming into your lane. Fintech investors are coming into your lane. If it's a crypto AI project, AI investors are coming into your lane. And you just have to be a better partner. You have to be a better VC. You have to be a better support. You have to be a better advisor. You have to be a better supporter of the founders that you're working with. And if you can't, then you don't get to manage money. The end. So it's kind of quaint advice, but it's the obvious answer, is that if crypto wins, it wins by becoming ubiquitous. And the companies that use crypto are not crypto companies. They're just companies.
How long do you think it will take for people to trust AI to make payments for them the same way they trust that their judgment is better than going with an expert? Because that's already happening.
Yeah, I think not long. I think maybe another year or two, honestly, is probably as far as it will take. These models are already getting really good at being able to use resources intelligently. And now I think the economic nature of so people are spending so much money on AI tokens that they're already effectively spending money.
Your feelings on Ethereum right now would be insightful.
My feelings on Ethereum. Right now, price wise, obviously, alts are pretty challenged. And Bitcoin itself probably needs to get a floor, some footing in order for ETH and Sol and kind of everything in the alt space to be able to do well. That's going to take some time. It's pretty clear right now there's not a lot of appetite, and retail is gone. Retail is trading AI stocks and memory stocks and space. All this other stuff is captivating retail over crypto right now. But if you assume that comes back, I think actually Ethereum is pretty well positioned to be able to do well in this environment. The recent launch of ETH Labs, which is the spin out from the EF, which is this new organization that's more commercial and more focused on acceleration relative to the EF, I think is a good change. And it shows that Ethereum is expanding beyond the initial remit of the EF. The EF has always been kind of this like innermost chamber of the high priests of Ethereum, and they're kind of devoted to the core values, whereas ETH Labs is more pragmatic, and I think that pragmatism is good. It's really what Ethereum needs at this point, when it's much more about adoption and institutions and market support. So I think that is a very good development for Ethereum. Solana is still a little bit, I think, struggling to nail down its identity. If you remember the last cycle, Solana was the retail chain. It was the meme coin chain. It was the trading chain. It was like everything consumer goes on Solana. And that was very much Solana's positioning. They embraced it to some degree. They kind of never were really super comfortable with the meme coin stuff, but they sort of knew where their bread was buttered, and they didn't resist it. Now it's very clear that that's not the tune that Solana is singing, right? And this will be interesting if you get Mert to come on and you let him know what I said.
Yeah.
So I think Solana right now, it's a little bit of a no man's land, because the reality is that still the money being made in Solana is being made by Pump.Fun, and like the meme coin activity is still there, right? So right now, Ansem coin is pumping, it's getting all this action. So there's some residual activity still happening in the trenches, but where Solana is trying to position themselves is about TradFi. They're like, oh no, we have stable coins, and we have asset tokenization, and we have this, and we have that, and we have TVL. That's the story that Solana is trying to tell. It's where they're spending their money. It's where they're pushing all their effort. But it's not really working on that level, right? Solana is not best in class there. Ethereum is more TVL and more institutions and more tokenized assets and RWAs and so on. And if it comes to volumes, Hyperliquid is eating everyone's lunch. And then, number two behind them is Lighter, which is built on Ethereum, and so on and so forth. So that's part of the reason why there's this dissonance right now, I think, in Solana land, is that we are still the meme coin chain de facto. We really don't want to be. We know that that's kind of a dying category, and we're trying to diversify our brand away from that. But there's a dissonance right now in Solana that's difficult to resolve.
Haseeb, it's been a pleasure. Thank you for being great as usual.
You're very welcome.
I'll let you go now.
All right. Godspeed.